Welcome to our crypto market update for July 3rd. In this update, we will highlight significant trends, forecasts, and opportunities in the cryptocurrency market that can impact your investment strategies. As we enter the second half of 2024, Bitcoin, often referred to by its ticker symbol BTC, faces challenges. After peaking at $73,750 in mid-March, it struggles to break $70,000 and now trades at $61,000. Despite this, Bitcoin remains a strong investment for several reasons. Bitcoin holders can expect significant appreciation in their assets by the end of the year. Tom Lee, head of research at Fundstrat, forecasts Bitcoin reaching $150,000, driven by the resolution of Mt. Gox repayments. Mt. Gox, once the world's largest Bitcoin exchange, declared bankruptcy in 2014 after losing 850,000 Bitcoins due to a hacking incident. The trustee overseeing the bankruptcy is now preparing to repay around $9 billion worth of Bitcoin to approximately 20,000 affected users. This significant event has created nervousness in the market as investors fear the potential selling pressure from these repayments. Current market performance. Bitcoin achieved a new record high this year before experiencing a slight decline. This decline, around 7%, is linked to market concerns over the Mt. Gox repayments. As the market absorbs the impact of these repayments, Bitcoin is expected to rally sharply in the second half of the year, according to Tom Lee. Other forecasters are also bullish, anticipating positive effects from expected Federal Reserve interest rate adjustments. Bitcoin has rebounded from a challenging 2022, hitting a new all-time high of around $73,000 earlier this year. The Bitcoin ETF story is far from over. Bitcoin exchange-traded funds, or ETFs, are a key reason to buy Bitcoin below $70,000. These ETFs continue to attract investor inflows, supporting Bitcoin's price. Although initial interest has slowed, institutional investors are beginning to buy into these ETFs. BlackRock, the world's largest asset manager, predicts significant institutional investment soon. Their successful iShares Bitcoin Trust, listed on Nasdaq as IBIT, suggests strong future prospects. Increased institutional investment could significantly boost Bitcoin's value. The Bitcoin halving. Patience is key. The Bitcoin halving on April 19th was expected to drive price appreciation, but its effects are yet to be seen. Some have prematurely dismissed it as overhyped. However, understanding the halving's impact requires patience. Bitcoin miners, facing a 50% cut in mining rewards, have sold over $200 million worth of Bitcoin since early June, contributing to price declines. Historically, Bitcoin halvings take months to influence the market. For example, after the May 2020 halving, Bitcoin initially struggled but surged from $8,500 to nearly $30,000 by year-end. Focus on the long-term outlook. Investors should focus on Bitcoin's long-term potential rather than short-term fluctuations. Bitcoin is becoming mainstream, with spot Bitcoin ETFs attracting new retail and institutional investors. Regulatory acceptance is growing, with Bitcoin becoming a topic in presidential campaigns and gaining momentum in Washington, D.C. At its current price of $61,000, Bitcoin appears significantly undervalued. The long-term growth potential remains strong as Bitcoin gains broader acceptance. Key takeaways. Bitcoin ETF growth, continued inflows and potential for massive institutional investment. Having patience. Historical patterns suggest significant price increases months after the halving event. Long-term potential, increasing mainstream acceptance and potential regulatory support. Bitcoin remains a promising investment for those who can look beyond short-term market swings and focus on its long-term potential. Government transfers and market implications. Significant transfers by the German and U.S. governments have caused heightened volatility in the crypto markets this week. Notable transfers. The German government transferred $95 million, which is about 1,500 Bitcoin, to various exchanges. The U.S. government moved $11.75 million, or 3,375 Ether, to an unspecified address. Large-scale liquidations like these can push Bitcoin prices down. For instance, a previous $195 million transfer by Germany led to a 3.5% price drop. Germany holds $2.82 billion in crypto assets and is actively liquidating its holdings. Regulatory developments. Europe's new MiCA, or Markets in Crypto Asset, regulations have prompted global exchanges to delist euro-denominated stablecoins to comply with the new rules. This regulatory shift adds another layer of complexity to the market. Standard Chartered's Bitcoin price forecast. Jeffrey Kendrick's projections are quite optimistic. Next month, Bitcoin could hit a new all-time high. By November 2024, there's potential for Bitcoin to reach $100,000, coinciding with the US presidential election. Looking further ahead, Kendrick sees Bitcoin reaching $150,000 by the end of 2024, and potentially $200,000 by 2025. He suggests that political developments, particularly President Biden's candidacy, will significantly impact Bitcoin prices. A Trump presidency might also favor Bitcoin due to his supportive stance on the cryptocurrency. Investing in Bitcoin mining stocks post-halving. The halving impact is something to consider. Bitcoin mining stocks typically correlate with Bitcoin's price. The recent halving event on April 19th, which reduced mining rewards by 50%, has significant implications for these stocks. To compensate for the reduced rewards, miners sold over $200 million in Bitcoin in June, pushing prices down. However, the Bitcoin ecosystem is expected to stabilize. Historically, prices have surged after previous halving cycles, suggesting a similar pattern in 2024. The AI opportunity. Some miners are leveraging their computing power for AI, creating new revenue opportunities. This diversification could help mitigate the impacts of halving cycles. However, not all equipment is suitable for AI tasks, and renewable energy setups for mining may not be ideal for AI computing. Investment considerations. Promising stocks. Look for companies diversifying into AI, like Core Scientific, which signed a significant AI deal boosting its market performance. Adapting to trends. In previous cycles, the focus was on cheap renewable energy. Now it's on leveraging AI's power. Conclusion. Bitcoin's long-term potential remains strong despite market volatility and regulatory changes. Investors should stay informed and consider diversifying into areas such as AI for robust long-term growth. Key takeaways. Bitcoin price forecasts. New all-time high next month. $100,000 by end of 2024. Government transfers, causing market volatility. AI integration. A promising opportunity for Bitcoin miners. By staying updated on these trends, investors can capitalize on opportunities in this evolving sector.